My name is Yakub Ibrahimov. I see many new faces here and many familiar faces once again. Today we are going to be discussing about the indicators. What are the two best indicators that traders should be using in order to be able to follow the trend? Before I go ahead and start, I have to ask this question for you. Which one of the major indicators that everyone uses do you think is the most relevant one to follow the trend? Can you type down on the right hand side chat section, please? There we go. As we are looking through your answers, most of you have guessed it, at least one of the parts very well, correctly. Moving average is one of the most relevant trend following indicator out there available for everyone. Now, today we are going to be discussing moving average and also another indicator, and I'll be showing you how you can read it in order to be able to maximize your results. I'll go through the details. I'll give you some live examples. Maybe we'll analyze the market with you live and see what we can achieve with this one simple indicator that you have. Of course, everyone claims to be able to use it. I do not claim to be the best person to use indicators because in general I don't really use indicators. Those of you who follow my strategies know that I rely mostly on Fibonacci and also price action trading. But of course, moving average is also part of my trading strategy. That's why I wanted to show it to you. Today's training is delivered to you by A2Z Forex in association with Trade360. Towards the end of this webinar, you can go ahead to a2zforex.com and register there in order to be able to get $50 live verification bonus for yourself with Trade360 as well, and try the strategies that you learn from this training, apply it on a live trading, because in general I don't really support demo trading. Now let's get back to the actual strategy and actual read of the indicators, how we can really use it. I'm going to be using, of course, the Trade360 platform. For those of you who have never utilized it, it's also a good opportunity for you to see what is really happening. First of all, if you are a trend follower, you can see that on Trade360, you have this small widget on your chart, which shows 52% of the traders are selling and 48% of the traders are buying. So it gives us an opportunity to see that the market from a little different perspective, that look, most of the people are selling. Now, let's move on to the chart closely. Looking at the market, you can see one major thing. I've added one moving average. This is, I'm going to utilize 50 moving average. When you go ahead and add directly, it often gives you the 20 moving average as a default moving average parameter. So we will be utilizing 50 moving average. There are many ways to utilize moving average. Some people will tell you, look, you have to look for break above the moving average in order to be able to look for bullish entries. Some people will tell different things. The way I look at the market is rather different. I do not really read the market above or below the moving average or as the direction of the market. However, I heavily rely on the slope of the moving average. Slope is the direction of the moving average. As an example, if you look at it over here, you can see that the direction of the moving average is downwards. So therefore, it doesn't make sense for us to consider any long opportunity for euro dollar that we are looking at right now from this level onwards and up until here. The reason behind it is the following. When you are looking at the market and the direction of the 50-hour moving average, which means 50 previous candles direction, is telling you that the market is going downwards. So when that happens, it doesn't really make sense for you to go and start going against the trend and start buying it. It will just hurt you. However, once you see the market becoming flat, like over here, once you see that the market is becoming flat by means of moving average, and the price is bouncing above the 50 moving average, this is a signal for you to avoid selling. I repeat again, it's still not the signal for you to start buying, but it is a signal for you to avoid selling. Okay, and you can see it over here. The market broke above the moving average is flat. So what is the entry potential here? How can we enter the position? Can anyone answer me? If you can answer it, I'll give you the chat for you as well. Let's give 1 minute. I want your answers on how we can consider bullish opportunities from this chart that we have in front of us. All right. I'll go through one by one your answers. If I name it correctly, Dirk is commenting, wait for bullish price action at this point. One good comment. Candle close above the moving average. Well, it's okay, but it's not really the answer that I'm going after. Reset of 50 MA from Samir is commenting. Then we have enter if the next candle is bullish, which is potential level from Kim. The volume in MACD, well, we can consider it, but we are going to go through it. I haven't really discussed MACD yet. You wait for break of the last high. This is the answer that I'm looking for. Ricardo, well done. Ricardo Patrocinio. I hope I said it correct. So what is the way that we can consider the market in order to go long? First of all, we can see that the long-term market trend is bearish. So in order for us to be able to consider any kind of bullish entry, we need to see the previous support, which is the current resistance, to be broken above. And how we can do that? It's very simple, by the way. This line that you are seeing that we have in front of us is outlining the previous support, which has become a current resistance level. The current resistance at this level, if it is broken above, you're going to be looking for bullish entries. If it is, I'm referring to this level, by the way. And if it is not broken above, unfortunately, it's not going to be the correct level that you're going to be looking after. And you cannot really consider much on this level. So let's now look at it. What is the level that we can look for? Okay, whatever from top to bottom that you can have is telling you, let's say from here up to here, whatever the level is, you can consider entering from there onwards, and you will be aiming for approximately, let's say if we are entering at 1.0683 and our stop loss is going to be somewhere over here, 1.0725 30 zone, let's say 1.070630 zone. So we have approximately 50 pips of stop loss. So what we are going to be using, those of you who have been participating in these trainings for long enough know that I'm using 1 to 1.5 risk reward ratio. From 1.0680 zone upwards, we are going to be aiming for 75 pips of take profit, which is going to be bringing us approximately 1.0755 level, and you can see that it is just to the top of it. So the price action is actually telling us what to really expect from the market just by looking at one simple moving average, 50 simple moving average. You don't need to have crazy indicators. You don't need to pay crazy strategies out there, because you can just achieve most of these amazing results by using one simple moving average, 50 simple moving average. Apply it on hourly time frame and you can use it. Now let's go back to the same way, because we achieved our take profit. Obviously we are not going to be going crazy and just enter one after another, risking the profit that we made. Afterwards we are going to be waiting for another confirmation to enter. What is the other confirmation for us to consider. First of all, the next confirmation for us would be to look for the market for a bounce up and again enter from the moving average upwards once again. However, if the moving average breaks below it and you see that moving average slope is becoming flat, it is the time for you to consider sell opportunities once again. And where we can sell it, once again, this is the market has broken below. We can see that there is a support over here. This is the support level. Yeah, and from here onwards, we will be looking for sell opportunities. We enter the market right at this level, at the break of the previous low, and we have a stop loss once again at this level, and we will be aiming for 1.5. You can see that it will be hitting the level towards the end of the trend right over here. So the market, just by one simple moving average, is telling us how to follow the trend. Do you understand it? Is everything clear? Can you comment on the chat section, please? Everyone says that it is clear, so I'm going to be moving on. The next indicator that I'm going to today introduce you as the best trend following indicator out there is going to be MACD. And I'm not going to consider anything else on MACD, okay? I will not discuss crazy things about it, how to see the crossovers and this, that. This is not what I'm going to be talking about. But what I will discuss with you is actual MACD level, whether it is in positive side or it is in negative side. Do you guys all know what does MACD stand for? Can you comment on the chat section again? Some people says yes, some people says no. Paul comments, moving averages, convergence, divergence. Great comment, Paul. Indeed, MACD stands for moving averages, convergence, divergence. So it considers two moving averages and see whether or not they are aligned to each other or not. If they are aligned to each other or not, based on it, it gives you the signals. And there is generally let me delete the sections over here. You generally have other signal bar and histogram and MACD, etc. I'm not going to be looking at the MACD or signal bars or signal lines, but I'm going to be looking for the histogram only. This is the black section that we have. And I'm not going to utilize anything else. This is the default MACD parameters, 12, 26, 9. Basically, if your moving averages is supporting you to sell, and you see that MACD is below the zero line, this is the zero line, this is just a perfect sell opportunity for you. And you can even almost go ahead and start giving signals because, well, 95% of the time, you will be on the right side of the trend. All you need is to make sure that you use the right risk-reward ratio, you use the right risk management. Forget about risk-reward, but risk management is more important than risk-reward. So if you are going to be using, if you are having, let's say, $2,000 in your account as an equity, with this strategy, as long as you keep maximum of 0.05 loss per entry, which is $5,000 entry size per entry, you're going to be on the safe side. Even if you risk 100 pips, what can you lose? I mean, what can you lose? It's in the very, very, very worst case, you're going to be risking $50. And in general, you should be aiming to get anyway 1.5 times. So you risk $50 to get $75. What better risk reward than that? Is everything clear now? Now let's look at the market at the moment to see whether or not we have a possible entry and what can we expect from the market. At the moment, as an example, if you look at the euro-dollar pair, you can see that we have a support zone, or we had a support zone at this level, which is being broken right now. I'm talking about, let me look at it a little closely. I'm talking about 1.0573 level. So 1.0570, 75 level is our support level. It is being broken right now. So since it's broken, you can consider to sell. Our moving average is supporting the entry because it is flat, it's turning downwards. And if you look at the MACD, MACD is below the zero line. Indeed, according to MACD, you could have started selling it from as high as 1.0623 level, and that would have been a good position for you. This is for euro dollar. Let me just add another currency pair here. Let's go for USD Japanese yen. We're going to be adding MACD as usual. I'm going to be deleting the irrelevant sections that I don't really need to see. And we're going to be adding also simple moving average, 50. Remember, I only use 50. I think I pressed enter. I have to go do it again because I accidentally pressed enter. So we are using the 50 moving average, and there it is. For USD Japanese yen. There it is. So looking at the USD Japanese yen, we can see that the pair has been above the zero line, which is a bullish signal for MACD. Then moving average is showing upwards. So again, it is a bullish sign. And from there onwards, we see that the previous high, which is our resistance level, is being broken. At this moment, 1.2325 level with your spread, you could have considered to buy with just your stop loss right below the 1.2295 level. So you would be basically risking approximately 30 pips to make 45 pips, and you would have almost acquired your target right here. It's just 2 pips or so difference. It's gonna be probably achieved in a couple of minutes now. So this is overall the levels. This is overall the best trend following strategy that I believe there is for new starting traders. And if you have any questions now, we can go through the questions and answers section. Okay, there we go. The questions start. Dirk is asking, we combine moving average, simple moving average, 50 and MACD, and the previous high and low. That's it. This is the very basics of price action trading with some indicators out there. But the time frame is also very important, which is the next question from Gopi. You should be applying this on hourly time frame. Do not go start wandering around with different time frames, because the difference between your time frame will affect your profitability as well. Take profit targets that we have, one of the followers, Pang, is asking. Take profit is basically whatever you are risking from your entry, including the confirmation from 2 of the indicators and the breakout of high and low, etc., to your stop loss multiplied by 1.5. This is the number of pips that you should be aiming for as a take profit target. Next question is, so we are mainly considering the support resistance break along with the moving average direction. Well, this is mostly the type or the structure. That's correct. I don't know how to say your name, Seppo. I think you are from South Africa. Another question, do we decide to exit manually as well? Indeed, you can. If you are feeling happy with your result, why not? You can exit the entry manually. Imran is asking which MACD should we use. You can use just any MACD you are using. Just use the histogram part of it, and you are just done. You don't need anything else for MACD part. It's just you're looking for whether it's above or below zero line. Okay, now we have a very good question. What are the negative points of this strategy? Well, there is no holy grail. We all, I believe, agree with it. And I don't promise to give you a holy grail. This strategy is not 100%. Indeed, I don't know a strategy that I have used in my 10 years of Forex career that's 100%. The best one that I have had is 92% win ratio, which is combined with Fibonacci. And this one, I believe, is something around 68% or so win ratio, if you are using it correctly. And it really depends on your criticism for yourself. How much or where you define your support resistance level is very important. You need to practice your support resistance level definition as much as you can. And there is some easy way of going through it. If a level is only tested once before, it is not really support or resistance. But you need to see a level which has been tested at least twice. My preferable one is 3 times. So if a level has been tested 3 times, that's a real support resistance level that we are looking for. I hope it answers your question, Gopi. Samir is asking, what's your win ratio? Samir, my personal win ratio is 92% right now. But my trading style is much different. And my account size is also much, much different than those of you being as a retail trader. Pang is asking how to see 1, 2, 3, 4, 5 ABC wave from this chart. Well, I'm not an Elliott trader, Pang, and I don't like Elliott wave. So I can't answer your question. I don't believe that you can put the market into 1, 2, 3, 4, 5 just like that. This is against my personal, analysis structure. Ricardo is asking another good question. Do we want to wait for MACD to close below or above the zero line? If you have just one candle going below it, or one histogram going below the zero line, it is just enough for you. Your biggest and the most important decision-making factor is your moving average and your price action by means of break above or break below of the previous high or low. We have just 2 more minutes for questions and answers, and afterwards we will be finishing up this training. In the meantime, I have some questions for you, if you can answer it for me. How long have you been trading in Forex market? We have another good question from Gopi. What are the best currency pairs to trade this? You can trade this pretty much in any currency pair that you are looking for. If you have a European currency or USD inside for the pair that you are trading with, will even perform much better. So you can say that you can trade pretty much any currency pair out there. But of course, it works the best in majors, and you can also use it, by the way, in gold trading and oil trading as well. And you should not be trading it in a ranging market, by the way. This is the answer for Kim's question. Thank you very much for answering the poll question. I have one more question for you. How would you rate today's webinar? And I'm expecting 5, of course. If you are saying 4, you better have an answer. I'm just teasing you. This strategy will be, Ron Ian is asking, is it working during the volatile market only? No, it's not working during the volatile market only, but it is working much better in a trending market. So if you see the market trending on one direction, it is just a perfect opportunity for you. I'll just share one secret with you. In 2007, 2008, I used this strategy on a $25,000 account. I was using it on gold only, okay? And 2008 was the best performance of my life. I had 98% win ratio, especially on gold. And I managed to turn my $25,000 investment that I had received into a 7-digit account. 7-digit, for your information, has 6 zeros behind. So it's more than $1 million. I have done it. I've tested this strategy alone in an account like that. So I know that it works. But the biggest problem that you receive with this strategy is your self-ego, okay? If you can overcome your self-ego, your greed that tells you, no, you should trade more, or you can enter even more, or you don't need to just follow the market to break below the support line. You can just enter from the high. The second, if you go that way, that's the time for you to start failing. So as long as you don't really do it, you will be on the safe side of the market. And my final question, guys, for you is going to be, is what kind of webinars would you like to see from us? As you're answering this question, if you have any specific feedback or commentary, you can always contact me personally. I'm always available. So you can contact me on my Skype by typing my initial and my last name. And I will be more than happy to help you. I don't think that I can write it just like that here. But I will send you all my Skype personally. There you go. You have received it in the message section. Okay, we have one final question, and I'm going to be finishing up here. Dirk is asking, could I please repeat the error in this strategy that I was talking about? The biggest error that you always will end up is going to be your personal self-discipline. The second you start applying or basically ignoring the price action, or start trying to buy on the lows and aim to sell on the highs, this is the level that you're going to be failing. One thing that you should be also aware of this kind of strategy is that quite often, minutes or an hour or two after your entry, you will be right away entering into a negative territory. Some 5 to 20 pips, you will be in a negative zone. But it doesn't mean that you should start panic attacking and exiting your pair or your entry. This is the level that actually confirms that you are on the right side. Because if it obviously goes more than 25, 30 pips against you, it would have hit your stop loss anyway. That would be the unfortunate answer for your entry, that you didn't analyze the market correctly. Okay, guys, that's it so far for today. We had quite a diverse team over here, although some of you kept it shy and didn't want to share your questions with me, very selfishly. I appreciate your time being spent with me. And those of you who are looking for more webinars like that, dial into a2zforex.com and make sure that you are following all the webinars that we are following or we are hosting. Also, visit a2zforex.com, and you'll see on the right hand side 2016 Forex Awards. Make sure to vote for your best Forex partner or broker. For your information, today's webinar sponsor, Trade360, is being nominated on multiple categories. Many traders have voted for them. So try to test them as well. Open your account and get that $50. It is anyway free. You can test the strategy that I've taught you today and see whether or not if it works. Okay, guys, thank you and have an amazing day ahead. Stay positive, stay in green. Take care for now. Bye-bye.